whole 2025. Okay, and the first webinar that we started in January 2025 was actually how to invest and optimize your CPF. So I actually teach you how to you invest using your CPF and how do you look at your CPF as an investment and all this, right? And I teach you the tricks on how do you optimize your CPF. Okay, so don't worry if you miss out this. Don't worry if you miss out this webinar, because I'm going to be doing it again in January 2026. Okay. Next, we also cover about dividend investing through REITs. We talk about the REITs market and how can you invest through REITs in February. Then in March, we actually cover how do you read financial statements. So I teach basically the basics about the financial statements. And in April, we because of the trade war, we did a webinar to talk about the trade war. How do you navigate the trade war as a long-term investor? Okay. Then what is the best stock for you? This one I talk a lot on the psychology about investor. It's all about choosing the right stock that suits you, not you going to buy into every stock. You need to buy into certain type of stocks that really connect to your your emotions. Okay. And finally, today we're going to talk about the stock market 2026. What am I looking at and how's my view like? Okay. So how many of you actually attended any one of these webinars? If you have, can you type me in the chat and let me know if you have attended any one of these webinars this year that will help for the general public? Okay, any one of you? Okay, so it seems like a lot of you actually have attended the webinar. So this year we have conducted 6. So next year we're going to have, we'll shift around the topics depending on the market conditions, okay? Okay, so let's go ahead. Let's talk about the stock market 2026, okay? So of course, I can't predict what's the stock market is going to like in 2026, right? So that is the most important thing, right? Nobody can predict what is happening to the stock market. Okay, but what we can do is based on the current valuation of the stock market and see how can we actually position ourselves in the stock market. Okay, so for today's webinar, I'm going to start off talking about what happened in 2025. Then I will talk a bit about the AI bubble. Then, like I said, I received more than 400 over questions by you guys. So along the way, I will answer those questions that you guys have sent me in advance for me to prepare. And I can't answer all of them. Like I said, I will take the best question and the most commonly asked, and I group them into categories like market economy, sectors, stock specific, portfolio management, and general investing. Okay. Yeah. So some of you have facing some sound issue or video issue. Okay. So there's a reconnect button. Can someone tell them there's a reconnect button at the top? If not, ask them to clear off the browser, clear off the cookies, and log in again. Okay. Okay, so I don't know what's happening to the software today, but the software is having a lot of issue today. I'm so sorry about it. Okay, I can't control over it. Okay, so disclaimer, whatever I share today is not a recommendation to buy or sell. It's for educational purpose. Okay, at the end of the day, because I'm going to be talking about different stocks, different companies, I'm going to show about valuation. Right, so I'm not recommending all of them. I'm just showing you what I think about all this company. Okay, so what happens in 2025? Okay, so the start of 2025 actually was very good until Trump decided to start Liberation Day. Okay, so Liberation Day, people don't know the trade wars, the tariff was very high for a lot of countries. Then, right, a lot of people don't think that it's going to go for a big market crash, but eventually it just crashed a while and it just recovered and we hit all-time high again. Okay, so at that point of time, to be honest, nobody knows that the tariff will recover so fast, right? The stock market recovers so fast, right? So at that point of time, if you remember, we say how do you position yourself is to sorry, is to avoid what I call what's the thing called? Export business, okay? But focus a lot on domestic business, right? The business that is within the country. So then you won't be afraid of tariff. So that's also how we invested, because even the domestic business at the point of time was affected by the tariff, right? And we took the opportunity to acquire some of the companies, and eventually it have all recovered. And it's a good bet in terms of risk reward. Why? Because in the event where the tariff, right, actually really prolonged, right, we will still do well. if the tariff didn't prolong, we still profit from it. Okay, so how many of you actually have attended that webinar about the trade war and you have navigate properly from the trade war? If you have, do type me in the chat and let me know. Okay. Okay, so I think some of you are facing problems. Okay, I think the problem is with the software today. Okay, because personally I can't even connect to the software using our usually our gadget can connect it. Today not get connected, so I have to use my laptop to do it. So yeah. Okay, so actually a lot of you actually navigate through the tariff already. Okay, so just a little bit update. I think the big concern for the past few years is actually basically the inflation, right? So you can see from over here that actually the inflation have gone down significantly. Okay, but in fact, it still haven't hit the target that Fed have. Actually, it's actually supposed to hit 80. Right, it's getting down close to 2%. Then because of the tariff, right, the inflation start to come back up again, and now it's at 3%. Okay, so it's still not yet at the Fed target, and Fed is very reluctant to actually cut the interest rate. In fact, in December, people thought they're going to cut in December, but it's still uncertain. You don't know what is it. That's why the market is like going up and down, and now it's like trending slightly on the downside. Okay, so you look in terms of interest rate, it's still coming down, but it's on more of the high side, right? If you have go to the AGM in DBS, right? DBS CEO at the point of time, the Gupta, right, he actually says that we expect the interest rate to normalize around 3 to 4%, which is now what we are seeing. Okay, so I think over the long term, right, the interest rate, what happened now? The interest rate normalized rate, right, should be around, he said 3 to 4%. I think it's around 2 to 4, this region that I'm looking at. Okay. Yep. So I think quite a lot of you is also having some issue also. Yeah, actually not a lot of them cannot attend the. Okay, yeah, but I think some of you can, some of you cannot. Okay, yeah. Okay, so next is, I think the big concern is actually the AI bubble, right? You have one hand, the OpenAI, which is like top 20 billion in terms of annual revenue this year, and yet they are spending like 1.4 trillion on infrastructure due in recent months, right? That is totally crazy. That is basically overspending for the AI. So people are concerned about the AI bubble. I think generally our team thinks that the AI bubble, right, is within the private market, private equity space, right? But the public market, in terms of the AI, the profitable AI companies, they're generally still producing the growth, or people who are using AI as a thing and invest, right? They are still getting enough profits. Later I will show you, right? Okay, the next concern is actually the NVIDIA, right? Funding across all the companies, right? And recently, NVIDIA also went to invest in Synopsys. So it seems like a right pocket in, left pocket out, that kind of situation, right? So that also very, very big concern, right? And then you see articles like 95% of the companies have seen zero returns to their AI investment, okay? Because you can keep investing, but you over invest, but the utility don't bring back the same returns. It's going to be very tough. Okay, but I think the concern is overblown. Okay, because in terms of valuation, I think we are still not that stretched yet. Later I will show you, then you will understand what I'm talking about. Okay, but I think if you are concerned about AI, you can always invest in non-AI companies, right? No need to buy into AI. If you really want to buy into AI, make sure you buy into those profitable AI with proper valuation. Okay, so one of our co-founder, Kenji, I think most of you don't really see him. He's a co-founder that is always hyped behind the screen run. Okay, he actually wrote these 2 articles about when the AI hype ends, right? When the AI hype ends, right? The investor playbook for what comes next, or how to survive the AI hype without missing the next Amazon. Okay, I think he wrote these 2 articles very well, right? I think both of you, right, should go and listen. Go and read this article by him. Okay, I highly recommend you go to fifthperson.com and read these articles. Okay. Okay, so far so good. Can you guys still hear me and see the slides? If can you please type yes and let me know? Because the system today is really, really very wobbly. So so I need to know whether you guys are there or not. Okay, because quite a lot of you actually still not working, still can't see the screen. Okay, so I think majority of you are still okay. So thank you so much, and sorry for the inconvenience again. Okay, So let's move on. Okay, so let's start off with the market economy and how the market has been doing so far this year. Okay, so if you look in terms of this year, right, in terms of the best performing market, right, it's not your US market, it's your Asian market, it's your Hong Kong market is up 31.56%. The US market is about 16.37%, and STI even performed better than the US market at 20.3%. Okay, I think this is expected because US market has been running a lot of time. Okay, as you keep running and running, of course, there will be 1 year that you will lose, right? So and your valuation get higher, is harder to go also. Okay. So what is the valuation for the market right now? That's the question that most people ask. All right. A lot of you ask, what is the valuation of the market right now? What is the Q1 outlook? Will S&P keep rising or will it correction? Is the US market overvalued heading into recession in 2026? Wow, this is all the questions that is sent to me. And this is the top question. Is the recession coming now? Okay. So at the end of the day, like I told you, we can't predict all the event, but what I can tell you is what is the valuation right now and how you're going to position yourself, whether you want to be more conservative or you want to be more aggressive. That's the most important thing. Okay, so let us start off with the US market. Okay, so the US market, right, you can see over here in 2025 was down because of the tariff, right? So like I told you, stay invested at all time. Okay, so if you have been following our YouTube or you have been member with us, right, we always say stay invested at all time. Is the only thing that is different, right, is your cash position is either more cash or less cash only. That's all. But you always stay invested. And in the event, if some of your companies get too expensive, then you start trimming the company. Okay? Right. So if you have trimmed because of the tariff, right, then you'll miss the all-time high this year. Okay, that they have passed. Okay, so you look in terms of the S&P 500 10 years valuation, the average is about 25.4. So right now we are traded slightly above the average. Okay, actually here was before the crash, right, was very high actually, the 30 time. Then now we are slightly coming down. All right, so I think the correction right now, right, is okay. It's okay, right? Like I said, 70% of the time, right, for the past 94 years, 95 years of the stock market, right, the market will correct between 5 to 20%, 5 to 19.99%. Okay, so it's very common for market to think it happens 70% of the time. Okay, so don't be panicked. No markets will keep going up one. They have to correct a bit, then they have enough energy, then they will go back up again. Okay, so just take note about it. Okay, so if you look at the Shiller Cape ratio, right, then that also a bit concern, right? So we are even surpassed the previous peak in the near 2021, right? Then now we go past and it's very close to the cyclical adjusted PE. Okay, but you must take note, at that point of time, this is a 10-year cyclical adjusted, right? But in recent 5 years, a lot of the techs are growing very fast, right? So if you do a 5 years one, may not be actually that high. Okay, so actually, if you were to look into the S&P 500, right, it actually being carried, right, by the Magnificent Seven. So if you look in terms of the Magnificent Seven valuation, right, it's traded above the fair value, right, which is exactly like the S&P 500. But if I were to equal weight, that means assume that S&P 500 and the other 500 companies are all equal weightage, right? This is the valuation right now. It's actually a fair valuation. Okay, so right now we are around the fair valuation mark. So based on what I show you, right, the equal weightage S&P 500, do you think that it is expensive right now? Yes or no? Can you type in the chat and let me know? Okay. So what do you think? Yeah, so based on what you see now, it does not seem that it's super overvalued, right? Because it's the one that really pulls out the valuation is the Magnificent Seven. Okay, but overall the general stocks, right, are still reasonably valued. Okay, it's unlike over here, right, to 2018. 2018 the Magnificent Seven the every other stocks are all up, right? So the valuation is slightly on the high side. Okay, so I think there's not much of a concern moving forward, but you never know one. Okay, not much of concern, but you never know. Okay, but you just have to be more cautious moving forward in the US market. That's what I think about it. Okay. Okay, so but I'm not saying that in such a market there's even, you see, like Warren Buffett have, record cash power, 381.7 billion, almost can acquire any company already, right? I'm not saying that you should avoid the market, because you see, even though Warren Buffett having a cash power, right, he is still buying stocks. You look at his recent, this whole year, he's buying like crazy. He's still buying. It's just that he's buying bit by bit. And you notice all the company that he buy, he pays very decent valuation. Okay, so the key for moving forward is, right, when you buy into companies, right, do not buy into companies that have very high valuation. When the valuation is decent, you can go and buy. Okay, but if it's very expensive and you want to ride the trend, like say AI, now everybody chasing AI. So AI stocks are traded at very high valuation. So your position sizing for your AI stock should be a small percentage, not a high percentage, because you don't know when the AI bubble will burst, right? Do you agree with me or not? If you agree with me, can you type yes in the chat and let me know? Okay, other than Alphabet, I mean, that's the only sort of like AI related company. And I think at the time he paid also was a good valuation, if you were to backtrack it. Okay. Okay, so yeah, so please do not be too overly concerned. Okay, if the market is very expensive, we will tell you the market is very, very expensive. Okay, but I still think that moving forward should be more, you should be more focused on paying the right price, right? You must look at valuation. Don't overpay for anything. Okay, because now the AI companies, some of the AI companies, right, they are not making money. They are also very high valuation, right? But private equity AI, private equity companies, as in the private companies, are generally in the bubble. I feel like OpenAI and all this. In general, the rest are still decently okay in terms of valuation. So just be clear on this. Okay, so let's move on. Okay, so now let's go to the Hong Kong market. So now I start, especially this year, I get a lot of people asking me, is the Hong Kong market cheap? Is it worth buying? Okay, but 1 year, 2 years ago, Hong Kong market is like a trash thrown in the trash can. Everybody's avoiding. But this year it becomes like a market darling. Okay, for Hong Kong market. Okay, so Lauren asked, from the valuation perspective, do the valuation of Singapore REITs looks good to you? Okay, later I will cover the Singapore REITs valuation, so don't worry about it. Okay, slow down. Okay, I got all the questions. Most of the questions you ask here is all sent to me already. Okay, I take the very popular questions. REITs is also one of the popular questions. Okay, give me a while. Just drink some water. Okay, so this year you get the whole narrative, because of Trump, the whole narrative of China being a communist party, being a dictator and all this all disappear. Straight away, everybody is rushing into like China market share uninvestable. Chinese stock, 90% of the US investors set to increase exposure. Right, suddenly a lot of the US people are going back to the Hong Kong markets, the China markets. Okay, so how many of you actually listen to our YouTube? And do you remember what we say in the YouTube during all these questions? We say that all these fund managers, they leave the Hong Kong market. I can tell you, eventually they will come back one. They won't totally shun it off. At the end of the day, when money start to making, they will come back already. And you see, is it true or not? Right? Is it true right now that the everybody's coming back to the Hong Kong market? So sometimes these are opportunities that you don't want to miss. Like I if you remember some of our YouTube, we say that actually 2 years ago and 2023, right, wow, the valuation of Hong Kong market is 1997 valuation. And I say that this one, once you miss it, you missed it already. Okay, and now the Hong Kong markets are running up. Okay, don't listen to what I say now. Go back to our YouTube and track what we say. All right, and everything just turned out. Right. So at the end of the day, investing is all about seeing the current situation. And do you think that the situation is temporary or permanent? If you think the situation is temporary, and eventually people will come back, that is your opportunity. Then you have an edge over other people. But if everybody thinks that is an opportunity, then that you got no edge already. Am I right? You want to have an edge, right? You need to do things that most people don't do, and you outthink them, right? Which is the case of the Hong Kong market. Everybody's running away. So yourself, you have to think, have to analyze, is it true or not? Or is it just a temporary issue that we can take advantage of? And that's your edge over other investors. Do you agree with me? If you agree with me, can you type yes in the chat and let me know? Okay. So I don't believe in all this bullshit where people say, I don't go back to China. What is? When China start to make 100%, 200%, I can tell you everybody will just come back. Everybody is chasing after the money actually. Okay. So let's look at the Hang Seng market. So Hang Seng market has bottomed up in actually 2023, then after 2024, and now it just keep flying already, okay, non-stop, okay? And of course, there's some pullbacks lah. Don't expect the Hong Kong market to keep going up. Actually, Hong Kong market also quite volatile one, you know. So it just go up and down, up and down, up and down, but it's on an uptrend, right? Overall, you see, even though now it's like a bit retraced back, right? Because this year, my year to date gain is about 40%. Okay, starting of the year, I go up 25%. Then after I go back to close to 0%, then it goes up to 50%. Now I'm retracing back to 40%, right? So you must know stock market is like that one. If I have sell every of my position during the tariff, I tell you, I will not have make year to date 40% this year already, right? And I dropped from my high of 50%. So at the end of the day, right, you have to be patient, right? Volatility is part of the game, right? You have to take it. Don't always look in the stock. Just buy into a company and know that you hold long term and eventually you recover. Okay? So you look in terms of the Hang Seng valuation, right? The Hang Seng valuation is around the averages over here, you can see. Okay? But the long-term average is about 13.6 times. So I think they are still currently below their long-term average. So there's still room for them to run. It's not like US, you know, US is trading above their long-term average. Right? But Hang Seng, right, I think is trading below the long-term average. So I think Hong Kong market, there's still room to run. And moreover, right, Hong Kong market, why is that so? Is because they also have a max cap on. They are quite equally weight among their stocks in Hong Kong, right? Because Hong Kong Hang Seng Index is max only 8% cap. It's not like US. Suddenly this company grow, they can overtake the whole index and all this. Okay, no. The Hong Kong one company only can max 8%. Okay, so if the thing grow until 8% allocation here, let's say example, Alibaba keep growing and hit 8% already, then they will have to trim. That's why there's some sell now on Alibaba. They have to close the position. The funds have to close all this position. Okay, so that's how you think about the Hong Kong market. Okay, it's not like the US market. They keep going out, they keep carrying the index. People just keep buying. It's very different. So you must understand how the Asian markets and the US markets, they work differently. Right? How many of you feels that you learn something new that I just tell you? Okay, actually a lot of people don't know about this, but I'm just telling you. If you learn something, just type me in the chat and let me know. Okay, so let's move on. Okay, so right now let's move into the Singapore market. Okay, wow, Singapore market, good darling. After the government suddenly want to look at the Singapore market, and Singapore market just keep going up now already. It's like a market darling right now. Okay, so you look at the Singapore market, wow, they really hit all-time high. They even surpassed their previous peak in 2007, right? It took them so many years, 2007 until now, right? Now then they surpassed the 2007 peak, right? After the government decided to step in and how to revitalize the Straits Times Index. Okay, so they set up a MAS community and it really works, right? And now the MAS committees have really helped to bring up revive the Singapore market. It's now I keep getting a lot of people telling me what to invest in the Singapore market. But I can tell you 1 year, 2 years back, same as the Hong Kong market, Singapore market is trash, man. Right? It's trash, right? Throw in the trash can, right? That was the narrative back in 1 to 2 years ago, same as the Hong Kong market. The US market is like, I want to put everything in the US market, put everything. When Trump came in, right, and now the US dollar depreciate, people start to think another way already. Okay, so sometimes, right, you don't always follow a crowd. You might always ask yourself, what's your edge over the other investors? That's the most important thing. Okay, so in terms of valuation, you can see, wow, they surpassed their previous price to book, right? And they hit a record price to book around 1.5 times for the past 10 years. It's like, it's very high, for a company. Okay, but you also need to take note, right? Why I use price to book is because a lot of the Hong Kong company, a lot of the Singapore companies are in the old economy. They are more asset-based one. Okay, but since this year or last year onwards, they have been shifting the whole dynamics of the capital structure. They are turning the company into asset light, right? So when asset light companies they're trying to trade at higher PB. So actually, I can tell you, moving forward, right? Even though the long-term average for the Singapore market is around 1.29 times, right? I think over a long term, the Singapore price to book, right, will actually carry up because a lot of the companies become asset light. Significant shift of business model. So we can expect the Singapore price to book actually shifted up over a long period of time moving forward. Do you agree, May? Do you notice that a lot of the Singapore companies are shifting to asset light business? Do you Do you agree, man? If you agree, just type yes. Or if you know that a lot of is turning asset light, do type yes and let me know. Okay? I'll wait for your reply. Okay. Let's continue. Okay, so then I get question people asking, is it worth to invest in SDP, SDR, sorry, Singapore Depository Receipt. Okay, so these are some of the questions that were submitted up. Okay, so if you look at the SDR, right, I think usually I will buy to the actual local markets. Okay, but if the quantum is a concern, then SDR is a very, very good alternative. Okay, so there's no issue with the SDR. I think it's a good alternative if you don't have big quantums. Okay, so take note about it. That's one of the questions that was submitted. Okay, so right now I'm going to move into sector specific analysis. Okay, those of you asked about sectors already, I will put inside this category. Okay, so let's move on. Okay, so someone asked me, what is your outlook for Singapore REITs in 2026? Okay, and of course, there's a lot of other similar questions out there that ask the thing. Okay, so I'm now going to show you the REITs, Singapore REITs valuation. So as a whole, right, the Singapore REITs valuation, right, is already start recovering already. The Singapore REITs, you can see is trading very close to the fair value. Okay, if you have followed us, right, for the past 2 years, we have been shouting that the REITs is cheap over here in 2023, 2024, until early 2025, we also say that the REITs is cheap. You should look up on the REITs. You should look up on the REITs. Okay. So how many of you actually follow us at that point of time? How many of you remember that we talking about the REITs is very cheap at that point of time? Anyone of you listen to our YouTube or members, right? You should know that we have been shouting from 2023 to 2025, right? That at this area, we say the REITs is very cheap. You can consider looking at the REIT sector. Okay, but right now, at that time, the risk reward ratio was very, very good. Okay, right now we are close to Fed. I would say the risk reward is just decent, not that fantastic. Okay, just decent. Exactly like how the Singapore banks are not decent. So usually this kind of area will load up more. This kind of area we generally don't load up. If you want to load up, maybe just a bit only. If let's say I got no funds, I think still decent, but just I don't want to load up too much also. Okay, so that is my take on the REIT sector. Okay, I hope you guys benefited from our YouTubes and our other webinars. Okay, so the next question is, of course, the Singapore banks, right? You got the REITs, you got what? You cannot miss out the Singapore banks one, right? A lot of people ask, are the SG banks still worth buying at this level, right? DBS all-time high, still can buy not? I think everybody's mind is only DBS only, all right? Okay, so if you look in terms of the Singapore bank valuation, right, it's really stretched. Okay, they are traded way above the average. In fact, they are around 1 SD plus positive 1 SD, right? If you look at DBS, it's close. I think it's at the 2 SD for DBS. DBS is traded at very, very, very high valuation. Okay, I wouldn't, despite the U, right? I wouldn't want to encourage. In terms of valuation, I think there's more risk than reward in investing in DBS. That's what I'm thinking. Okay, why I'm saying that is because, example, right, if you have bought exactly like us during the COVID pandemic over here, right? Like I bought my OCBC. My OCBC price is about 9.036. That's my cost price for my OCBC, right? Even now, let's say the OCBC trade very high and it drops, right? I don't believe it drops to my $9 price. It's not easy to drop to there, right? So sometimes that's why I feel the risk reward is high, is because I know that when it drops, when it recover and when it drops, it won't drop back to my $9. Okay, but right now, if you let's say you buy a DBS, right, there's the probability of it dropping and correcting because of high valuation is high compared to when you buy it at low valuation. Do you understand what I'm talking about? If you understand, can you type yes in the chat and let me know? Okay, I need to make sure you understand. Okay, so in terms of OCBC was actually around slightly above fair, then it went up. Only the UOB is slightly coming down, but it's still above fair value for UOB. Okay, so in terms of valuation, I would say that UOB one is just decent only, right? But moving forward, I think Singapore banks will still benefit from it, right? Why? Because if you look at what's the SSB interest right now, what's the SSB and the TBU interest? Type in the chat. All right, what's the SSB and TBU interest? Type in the chat. Okay. What is the interest for SSB and TB right now? 1.3-ish, right? Jacqueline say 1.3-ish. Jacqueline, yeah, correct. Winnie also about 1.3, 1 point something below 2%, right? So now your all these alternative safe instrument are also low. When you got no place to put, where you put? Most people put into Singapore banks one. So that's why I say Singapore banks are generally still will benefit from, or because people got no place to put money already. They will look for places with high yield. And now the banks, despite you buy, right, it still give you a decent valuation of 4 to 5%, right? But you cannot count into all their capital return. That is not sustainable. All the capital return that they give, right, is one-off one. The moment gone already. Okay? So that's why I feel Singapore market moving forward, right, still will have probability of going up because people got no money to put. They got no alternative place to put. The best place to put is still stock market because the SSB and the TBU the yield are low. Okay, can you understand the concept that I'm trying to tell you? Right. So I think the Singapore bank will still likely will still continue to do decently well. Okay, unless any major crisis it will cause it to come down. Okay, but now if you look in terms of the interest rate, right, it's normalizing already. Right, they are balancing out with reducing all the interest that they're going to give in the fixed deposit and all their bank accounts. So it's balancing out the net interest margin. It's going to stabilize soon already. I feel they are stabilizing already. Okay, and because of low interest rate and all this, a lot of people are putting into the stock market, their wealth management and everything. Right, all the non-bank non-interest income, right, are also are coming up and growing. That is the one that the banks are very good. When the interest rates are down, right, they can benefit from all those non-interest income, and now they are benefiting from it. Okay, and also on top of that, they are buying back their own shares also. That also sort of like artificially push up the share price. Despite actually I dislike DBS buying back their own shares at such a high valuation. Okay, if you want to talk about capital allocation, that is not a good capital allocation. Okay, that one I don't really like it. Okay, I rather they give back the money than buy back the shares. Right. So I've been unless you tell me their share valuation is low, then I'll say, okay, you buy back, or fair value, you buy back. I think it's okay. All right, but right now, I think generally they are mostly on above fair one. I think it's not right to buy back shares. I don't really like it. Okay, so that's my take on it. Okay, so now some of you may ask, what sectors offer the best opportunity right now? I think there's a lot of sectors out there that you can look at, right? I mean, if you are concerned about AI, don't invest in AI. Oh yeah, okay. So right now, I'm eyeing the US insurance company, okay, because now they are facing the softening premium rates right now. So in general, right, the insurance sector usually during the softened premium rate, right, their share price will start to decrease on, and that sometimes will give very good risk reward opportunity. I'm looking at it very closely, but right now in terms of risk reward, it's still not that attractive yet. So I'm tracking them on a weekly basis to see how the markets turn out. So I got a list of insurance brokerage to look at on. Right. So that's one sectors that I'm currently eyeing right now. Okay, I'm eyeing very, very closely. Right. It's just that the valuation is not that expensive, right? Not that not that attractive right now. Okay. Okay, so let's move on. Okay, so someone asked, how's the outlook for China e-commerce stocks like JD, Alibaba? In your view, is China worth investing in for growth? Okay, so I think in terms of the e-commerce business, it's generally more stabilized in the China. Okay, but now the key thing is, right, they got into the instant retail. You all know the instant retail, like immediate, within 20 minutes they can deliver to you, and that is causing the cash burning again. Okay, so JD, Alibaba, and Meituan are fighting each other again. That's a headache. Okay, but the good thing about Alibaba is there's a cloud business out there that helping it to propel. Okay, but I think China is still worth to look at. I mean, if you look at Hang Seng Tech valuation, right, it's still below their 10 years average. Right. Okay, so because a lot of you ask questions like, what are the sectors in Hong Kong market they're looking at? And is China and Hong Kong worth investing? I think the Hong Kong tech should consider looking at Hong Kong tech because they're still traded below the average. Okay, so do take note that this chart is not any public chart. This one is I built out the chart on based on the software that we have. Okay, so this is based on equal weightage of the Hang Seng Tech. I based on the index and I built it out. Okay, So this is my chart and all this. Okay, based on here, they are still below the averages lah. So I think there's still opportunity in China tech companies, right? They are still not back to their averages. If you believe that they will go back, then there's a chance. All right. Do you all think that the China tech companies can go back to their averages? All right. Let me know your thoughts. Type in the chat. I want to know. I'm very curious of sometimes the public thoughts about it. Okay. Can you type in the chat? Okay, I think they will go back lah. I think they will revert reversion back to the mean. Right? I think a lot of you also think so. Right. Yeah, I think there's a higher probability on that right now, especially they are more focused and all this. Okay, so let's move on. Okay, so someone asked, what do you think about businesses that provide specialist advice? All right, will they be disrupted by AI reasoning? And if not, what mode do these companies have that can prevent AI disruption? Companies I'm thinking of, including Gartner. Okay, so I think as long as there's a human element involved, right, I don't think AI can disrupt like your Sears and all this, right? So in terms of Gartner, I think they do research through interview. So I don't think AI can do interview at this moment, right? Face-to-face interview and filling the markets and all this, right? So I don't think they can do it. So, but of course, I think I can be wrong also. I'm not so sure, but I'm basing on what I know right now only. But I don't know how the AI landscape will change. If the AI landscapes now are moving very fast, if they change very fast, maybe this company also will be disrupted. Okay, so I'm still unclear about this kind of thing yet, right? So there's still things that we need to wait and see approach, right? You don't need to buy into things that is, you can buy into things that weren't affected by AI and all this one. That will be a good thing. Okay. So next, someone asks, Go Outlook, what is your advice to add into the portfolio? Okay. So my take is right now, everybody is chasing gold. Everybody also know that the gold price go up, and everyone also buying gold. What's your edge over other people? Do you think you have an edge or not? So that means basically now gold buying is just a trend investing, right? If you are investing for trend, make sure that you keep the portfolio allocation very small, maybe 1 to 2%. Right? Don't make it like 10% or 50% of your portfolio. Don't do that. It's very risky. Do you agree with me or not? Do you agree with me of what I said about the gold? Okay. Why I'm telling you that is because if you look at the gold price from here, when the interest rate spiked very high, the gold price just went stagnant, went down, and took you 27 years to break even. And right now, you see the gold price is right here, Imagine you bought here, then you go all the way down, it takes you 27. You see, gold have a history, 27 years to break even. Can you hold, do you have 27 years on? Right. So when you do investing, you have to be very cautious about the time also. Right. If you want to buy, keep it small. If you want to speculate, but do not put in a lot of money. Do you agree with me or not? Right. Or if imagine you buy here, then it happens this same scenario again. You are down for 27 years, After 27 years, then you break even. Right. This is really, really, really very risky. Okay. Do not take this risk. Okay. Please do not take this risk. Okay. Keep it small. Okay. Especially when everybody chasing that particular stocks, right? You confirm don't have edge on when everybody's chasing it. So keep it small. Keep the percentage small. Okay. Okay. But my take is don't buy gold. I personally don't buy. Okay. When the gold hits a decent valuation, I probably will buy. All right. There's a way to calculate. I created a way to calculate how to value gold. Right, which I taught in the CPF. If I attended the CPF webinar, I tell you that. Okay. So if you miss it, then wait for next month. Next month I'll run again. Okay. Okay. So yeah, always keep. I think majority should still be stocks lah. Right. Gold is you want to treat it like an insurance just in case. And you buy gold, you won't buy physical gold. You will buy the gold ETF, right? Right. Is I won't want to hold into physical gold lah. Okay. I do have some physical gold, but that is my uncle give it to me back in 2017 or something like that. Right. When I got married, then my uncle just give me a gold coin only. Right. And I believe the value have doubled up already, right? Because he bought it in 2017, right? Yeah, 2017 around here. He bought it around here. So now the price have gone up 4 times. Yeah. So that gold coin go up 4 times already. Okay. Okay, so right now I'm just going to move on to stock specific questions. Okay, so some of you actually give me some stocks. Those I know what I will tell you lah. Those I don't know what I really cannot tell you. Okay, so this one is this one don't know. I think at least 20 or 30 questions is about Nvidia and Alphabet, man. I can tell you everybody is just talking about Nvidia, Alphabet, right? But nobody's talking about Alphabet 6 months ago, right? If you have attended Alpha Quadrant, right? This is one of the case study I say. I mean, I say that Alphabet was cheap, right? How many of you attended Alpha Quadrant, right? And you remember that I talked about Alphabet, right? So if you have bought Alphabet until now, right, you have almost double up already, right? The time the valuation was very low. And I'll say that it's worth the. There's some risk, but you don't mind. You can nibble a bit into Alphabet, right? I think some of the members are here. You guys should know lah. Okay. In fact, we are still invested in Alphabet. Alphabet, I think went up. I think our cost price for Alphabet is about $51. So now it's about 300. So it's about 5 6 times returns. Yeah. Okay. So let's look at the valuation right now. All right. So Nvidia in general, the valuation based on the average is just below the fair. Okay. The P went up very high, but it really showed the growth that it really growing. It's very different from back in 1999 where everybody's chasing after Cisco system, right? At that point of time, Cisco system example, the growth was like, I say example, was 20% per annum, you know, but the PE was 100 times. But Nvidia is different, you know, it's really have the growth, okay? But of course, after that, the Cisco system went bust, and it took them so many years until now they still haven't go past the previous peak, right? But in terms of Nvidia, they are still growing. Okay, but the only concern right now for Nvidia, I feel, is the left pocket in, right pocket out thing that you need to take note. Okay, but if you still want to bet on Nvidia, you still want to believe in Nvidia, just keep the percentage small, right? Don't all in Nvidia. Don't big stake in Nvidia. The risk reward is not there. Okay, so at the end of the day, right, to be a good investor, you need to understand risk reward. You need to understand valuation. You need to know when to going big, when to keep it small. That's the most important thing about investing. Do you agree on me? All right. If you agree, just type yes and let me know. Okay. So Nvidia, I think fairly valued, but be cautious. Okay. Alphabet, they already surpassed their previous valuation area. So I don't think you should consider looking at. You should have bought here, not bought here, right? Right. You don't here, you don't buy it, then here you want to buy, then you're wasting your time already, right? If here you don't buy and here you don't buy, that means you're always chasing after the trend, right? So that type of investing, right, is very risky. Then you will end up with buying high, selling low, right? So be careful, and at the end of the day, you really have to look at the valuation. Okay. Okay, so someone also asked, because Meta shares went down. Okay, is Meta still undervalued? Okay, let's look at Meta's valuation. Okay, so Meta valuation is around fairly valued right now. Right, it's high, then it's just fairly valued right now. Okay, but Meta, I feel you must buy with margin of safety. You cannot buy with just fair value. Okay, because I don't feel the business is very strong. Okay, I think Meta business are weak. Right, I feel they can be easily obsoleted. Right, unlike Alphabet, right, which is much stronger. Right. Why I'm saying that is because social media companies they tend to be obsolete on. You look at last time, what's the dominating social? Your Friendster, MySpace, they are all gone. They are being wiped out by Meta, which is your Facebook, right? And your Facebook is dead. Very few people using Facebook. Younger generation are using Instagram. Lucky they got Instagram, right? The WhatsApp, younger generation is not using WhatsApp. They're using Telegram. So eventually, I think there's a probability that Instagram people don't use on. People are using more TikTok right now. Okay. Okay. So someone asked, is PayPal a value trap? All right. Valuation and price are at low, and this doesn't seem to go up and all this. Okay. So let's take a look at PayPal's valuation. All right. PayPal, if you based on their 10 years average, they really still trade way below. Okay, but you must know the company has changed significantly. The landscape of the payment system also have changed significantly, right? Last time there's no dominating one, but now there's a lot of up and coming payment system like Stripe or Aiden and all this, right? So I think they're being punished because they are growing at low single digit for their revenue and low double digit for operating income. Okay, yes, they do very good capital allocation because their valuation is now very low. They do share buyback, yes, but like I said, the thing about the company is you need to see at this moment, right, is it temporary or permanent? Whether they can really trade back to the previous mean, go back to their mean reversion back up or not. Right, that's the important thing. Okay, but based on PayPal, I look at it, the payment system too competitive really, right? And the reason it falls also partly because the growth was slow and their payment volume actually dropped. Okay, so like I said, there's a lot of competition. There's a lot of payment solution out there at this moment, right? Which is increasing competition, right? The future is really, really very unclear, right? So this company is very interesting. Okay, if the valuation get even lower, okay, then maybe there's a chance to do a short-term profit from this. Okay, but at this moment, based on current valuation and based on the dynamic of the industry landscape, right, I think despite all the share buyback and the low valuation, I probably won't look at PayPal. Okay, how many of you agree with me, or don't, or disagree with me? Do type in the chat and let me know. Yeah, drink some water first. Okay, let me know your thoughts. Do you agree with my analysis or not, or do you have another thoughts? Okay. Okay, so let's move on. I think most of you agree. Okay, so someone asked, any plans to look at Palantir? Actually, to be honest, I never look at Palantir. I still really don't know. But I just, out of good way, I pull out the valuation that you show you. Wow, price to sales. They are traded above their average. Right now, they are price to sales, not price to earnings, not price to cash flow, price to sales 100 times. Right. I mean, of course, they can justify that because their revenue growth is like 42%, 47%. Okay. But I think the valuation is very high. Right. There's more risk than reward buying at the current valuation. If I own Palantir and let's say I bought at the low valuation and it goes up, I will trim my position. Right. Best is I can trim and get back my initial investment. So let's say I buy 10,000, it goes up 100 to 100,000. I sell and take back my 10,000. At least my base capital protected. That's how I look at Palantir. Okay. I think it's expensive, but based on normal valuation. But if the company continue to grow, it's a different story. But you never know. Nobody can predict growth. You only can guess. Your guess is as good as mine. Right. But my thing is look at the valuation and look at higher probability trades. Right. I want to look at higher probability bets that I know I can make it. So I don't chase trend, but I look for certain companies, certain type. So I always, like I said, why Warren Buffett can be a good investor is because he always invests in the same type of companies that he always invests. Right? You go and see Warren Buffett, right? I mean, if you have attended Alpha Quadrant, I have this premium webinar that I talk about what kind of valuation what kind of companies that Buffett always look at and what kind of valuation he always pay. And there's a pattern in it, right? So that is how Warren Buffett become the best investor in the world. He wait and he always wait for the similar type of companies that he invests in, right? So same for you also. If you want to be a good investor, you should wait for the type of companies that suits you and you buy it at the right price. That's all. It's as simple as that. But I can tell you, most people, right, cannot sit still. Most people, right, they want to change the trend. Most people, they FOMO. They fear of missing out. They will just go and buy one. Trust me. This is 95% of the people out there. Agree? I think after investing so long, telling a lot of people things, I realize most people just always have this thing, fear of missing out. Okay? Okay, so let's move on. Okay, so next is someone asked, what's your thoughts on NTTDC REITs and digital core REITs? Okay, I think not much of the on my thoughts about this. I think they are generally still very new REITs, right? So my take is right. Usually we don't invest in new REITs, one. We monitor them. We want to look at the management behaviors and we track them, right? That's why you will sometimes see us attending the AGM, right? And maybe some of you have met me or met Rusmin or Adam at the AGM, right? So we attend to get a feel of the management. We don't tend to just immediately jump in because the company just IPO and all this, right? Because at the end of the day, right, the company can be a good business, but the management is crook, they will screw you up badly also. So we want to make sure that the companies are good. So at this moment, we are still tracking these two companies. Okay, so just take note about it. Not much of insight we have for these two companies. Okay, so someone actually asked, Emote appears to have a good financial, but the stock price isn't moving up in tandem. All right, did I make a mistake in my calculation? Emote is basically, to give a context, they are basically, how to say, they help people to slim down and look beautiful, but they use something to pierce into the skin or something, right? That are minimum invasive. That's the business model of Emote. Okay, they sell their machines, then they make recurring out of that. Okay, but the thing about their business is, right, I think they are generally affected by the GLP-1, the Novo Nordisk GLP-1 tablet injection, right? Because that help people to lose weight and it's proven already, right? So that really shake up and do a structural disruption in markets. So I think they are being disrupted, right? I've looked at this company before. It somehow, based on the landscape, right, and the dynamic changing, it does not makes me want to look at them, right? It's very dangerous in terms of the GLP-1. It's disrupting a lot of this. And this one, Emote is minimum invasive. That means still invasive, but minimum, right? GLP-1 is not even invasive, right? It's just one injection. Okay, but this next year onwards, 2026, they're going to come out with a tablet form. So when they come out with tablet form, even not less invasive as compared. Okay, right? The Novo Nordisk GLP-1s, the drug. Okay. Okay, so let's move on. Okay, so someone said, can you elaborate on your Singtel shares? I'm holding some of this since 2024. Is it good to sell now or continue to hold? I think in general, Singtel is doing the right thing to move the company towards asset light. Okay, in fact, we actually did we did 1 year ago. We did a YouTube with interviewing the CFO, and I think he said very clear of the strategy of how they're going to return capital. They're going to move to asset light, right? So in terms of the Singtel, right, I think in general, their overseas markets all stabilized already. The competition also stabilized already. All goes down already. Okay. Okay. So the how to say the issue is their Singapore market. Their Singapore market, the competition is still very intense. It has not stabilized. Okay, but we're starting to see some consolidation where I think recently, I can't remember, is it, what's the fourth telco name? Simba, is it? Went to acquire M1, I think so. Yeah. So there's some slight consolidation, but we don't know how you're going to consolidate even more. Okay, so you have to wait and see in terms of the market right now. Okay. Okay, but I do recommend you all to go and listen the YouTube video that we posted 1 year ago. Okay. Okay, someone asked, Straight Trading has been underperforming for the past few years. What is your view on its business now and next year? Okay, generally, I don't think straight trading is a good business. They are in a very cyclical smelting business, right? Tin smelting business. And I have not seen very good capital allocation by the management yet, right? They does not show that they allocate the capital very well. Okay. And they always give me the feeling that they're just tagging along people to help them to grow their money. So example, they tag on ARA to grow, or they tag on Far East to grow their assets portfolio, to diversify into property and all this. Okay. And they even took a big stake and become a significant shareholder of Suntec at the point of time, right? Which I think is not a good allocation, because Suntec REIT is a lousy REIT. Okay, so I don't have very good impression about straight trading. All right, so that is my thought about this company. Okay. Someone asked, why share price of Thai Beverage seems to be stuck? I think the thing about Thai Beverage, right, is actually the sugar war, right? And also the weak consumer sentiments in Thailand. Okay, so you must know in Thailand now, they have not go back to their previous. They keep changing the prime minister. This is the first thing. Second, the economy had not really recovered back from COVID, I think, right? And I think the only good sign is Thai Beverage now is a pure play beverage companies. Okay, but the current yield of 4+% to take all these risks, foreign risks, forex risks, is too low already. The risk reward is not there. So that's why I've not been looking at Thai Beverage. So that's my concern for this company. Okay, someone sent me and say, what is your take on ST Engineering? The stock price has kind of doubled since the time back. Does it make sense to lock in some profit right now? I think in terms of ST Engineering, they are benefiting because of the war, right? A lot of the countries around the world are spending a lot on the defense. So they are definitely benefiting from it. I think moving forward, the next 5 years, people will still continue to spend on defense because now everybody is sort of like very selfish, focusing on their own self and all this. So I think, especially Trump, he's doing this, creating a lot of polarity among everyone, right? So isolating everybody together. So I think ST Engineering should be doing well moving forward. I mean, they are traded at one of their all-time high valuation also. So if you want to trim, you can trim some. If this is not a financial advice, but if I want to trim, I will trim some to secure something. If not, I think long-term prospect of ST Engineering is for next 5 years seems to be quite visible. Okay. Okay, some of you have been asking questions. I can't answer. I will spend my time focusing on those that are already pre-submit first. Your questions, I will leave it to the Q&A, okay? So there's a lot of you. Okay, so let's move on to portfolio management. Okay, someone asked, what's the percentage of cash in portfolio I should hold going into such a high market valuation and uncertainty? I think it really depends, right, on how much cash you have, right? I mean, if you have some expensive position inside your thing, you can start trimming a bit, right? But if not, personally, I'm holding about 20% cash, right? Because I'm, you work, you save, you can continue to put, so you can beef up your cash by your saving. You don't need to beef up the cash by trimming also. So just take note about it, okay? But I do trim position, or some of my position already hit the valuation that I want, I will sell. So that is for me, okay? Okay, what is your method of trimming a stock? And when do you trim and how much do you trim each time? Okay, so I think if trimming a stocks, first, I really look at valuation, right? So if the valuation is very high, I will start trimming a bit. Okay, but I don't trim all. Why? Because what get higher can go higher one. You never know one. Okay, but you trim some. Okay, so the most important is to really, let's say example, like I told you, the stock from 10,000 become 100,000. You trim off your initial capital first. So at least you'll never go below your base capital, right? So that's the first trim that you got. If not, sometimes I will trim 20% or 30% of the whole amount, right? So I case by case basis, really depends on stocks. So I base on the valuation. So if the valuation is higher, I'll trim more. If the valuation is decently but higher, maybe I'll just trim 20%. That's how I do my trimming lah. Okay. Okay, so someone asked, how do you position your portfolio for 2026 SG, US, Hong Kong? Okay, so if I want to invest in the US right now, right, let's say I'm coming from a clean paper, right, I will, US market, right, I'll be very selective. I'll look at companies at the right valuation, right? There's a lot of distressed companies in US market also. So I'll focus on those, right? Then I'll focus mainly on the Hong Kong market because I think Hong Kong market is still room to grow. I don't think they are very expensive. They are fairly valued, and the business starts showing good profits moving forward already. Okay, SG market decently well. Just look at the companies that give proper yield, but a lot of them have run up already. So I'll be very selective in the SG market. That's how I will allocate in 2026 lah. I'll focus more on the Hong Kong market actually. Okay, someone say my complaint is that 5% exposed me to many good companies. How do I streamline my portfolio to ideally 10 stock instead of being spread too thinly across, say, 30 companies? How do I choose one good company over the other? Okay, so you can say that means you're probably a Alpha Lab member or DM Pro member. Okay, so I would say that focus on quality first. Look at the quality of the companies and make sure that the companies that suits your character, right? So we tend to share a lot because members like to see more companies, right? Then we share with you, then we let you all choose. Okay, focus on the one that really can suits your character. Look at the quality, right? So example, let's say I give you Alphabet or Meta, right? Then in terms of quality, I can tell you Alphabet is a better quality company as compared to Meta. Then after I will look at valuation, right? So that's how you weigh things. Okay, the most important thing is to choose the one that suits your risk appetite. Okay, because some companies you invest can be a bit more risky one. Right, so you choose the one that really suits your appetite. Okay. Okay, someone asked, between property investment in Singapore and a dividend or a growth portfolio, which one gives better or less risky returns, assuming a timeline of 15 more years to retirement? Okay, actually, risky or not, it really depends on the investment suits your criteria or not. Okay, so let's say, example, you want to do into property investment, you want to take out huge loan. That means every month you have to service the installment. Okay, the question you should ask yourself, is your job iron rice bowl or not? That means an iron rice bowl, that means you won't get retrenched. That means you can keep servicing your loan for the next 15 years. Right? Or servicing two property, you and your wife decouple and buy. Right? Can you do that or not? Okay? Or you want to prefer a stress-free way of investing. That means you invest in liquid asset. In any event, right, you still can take cash back easy. Right? Property is illiquid. Right? You still need to take time to sell. Right? You need to handle your tenant and all this. Right? It really depends on your character, I would say. And you're not scared that you get retrenched, because after that you still can liquidate some of your position and buy. And you don't, because you got no loans or this. Okay, so for me, I prefer to own equity than property. Right? Property to me I feel is a place to stay only. Right? If you have too much money stuck in the property, unless you tell me you rent it out, then that becomes an asset. If you are staying in the property, right, that is actually a liability. So I focus a lot on putting my money into equity. Then property, I just keep it minimum money. So that's my take on it. Okay. Okay. What's your thoughts about property investment and stock investing? Can you type in the chat and let me know? I'm very curious about all your thoughts. Okay. So I think 15 years both the timeline is possible one. Okay. And in fact, actually, if you don't spend more than what you earn, you save below your means. Actually, within 15 years or 15 years is a good timeline. Let's say you really save and keep investing every year, invest and buy opportunity and fully invested at all time. Actually, 15 years you can hit 1 million if you think of it. That's possible if you're very thrifty and all this, depending on income. Right. YK say most Singaporeans buy property to gain remarkable returns due to leverage. Remember that property is cyclical, just that most people have no or fading memories. Yeah. Okay. Okay, so it really depends on what suits your character. Okay. So for me, I prefer to stay in a decent property that I invest everything. Okay. So it's no right, no wrong thing. It really suits your character. Okay, so someone asked, how do we mitigate our returns in US stocks in view of weakening US dollar? Okay, so actually, if you look, Singapore dollar and US dollar over the past 45 years depreciate about 1.1% only per annum, right, for the past 45 years. And US company, I can tell you, still by far, they still have the best growth stocks. So for a depreciation of 1.1% with a growth stock that can grow very fast, I think you should not care about the forex risk in the US. You must look in terms of the long-term thing. Okay, but if you turn back to Malaysia case, it's a different thing already, right? For Malaysia case, Malaysia and Singapore dollar depreciate about 2.5% against the Singapore dollar. Then that is a different case for Malaysia for the past 45 years, right? So the depreciation for Malaysia dollar is higher, right? And on top of that, the companies in Malaysia don't grow as fast as the US. So I think there's a higher risk invest in Malaysia. So that's why when people tell me whether Singaporeans should invest in Malaysia, I say can. You invest in export business, right? Because export business, their main currency is in US dollar. So the more they depreciate, the more the export business will do well. So that is one thing I usually tell people. If not, you also still can invest in domestic business. That means the business within their country one. But you buy a good valuation, but within 3 years or 5 years, you have to sell it off already. That means you go in for the position, then you sell it off when the thing recover, right? You don't go in for long term, you go in for short term, 3 to 5 years, right? Within 3, 5 years, usually the Forex won't depreciate that much, right? Right. So that's what I usually tell our members. Okay. Are you clear on that? So that's why I say don't worry too much of the US dollar depreciate. In then, other than US, they still have there's no other place that have best companies already. Okay? Agree with me? You all feel you all learn something? Anyone? What's your thoughts? Do let me know, huh? Okay, so right now I'm just going to move to the general investing. All right, so all those questions I cannot categorize them. I just put into general investing. Okay, so someone was, what would be investor approach as everything looks so expensive so far? Okay, so my take is, right, you have to be very selective right now. Look at the valuation, right? Look at the quality of the thing and the valuation. That's the thing that I'm doing right now. It's not like 2 or 3 years, 2 years ago where Hong Kong market, everything is cheap. Right. Now it's also very selective in the Hong Kong market. Okay. Same for the US market also and the Singapore market. You have to be selective. Okay, so someone asked, will there be a pullback? I can tell you, the stock market cannot always go up, man. Definitely there will be pullback, one. Right, the market cannot be go straight line upwards. You up, down, up, down, up, down, and after that go uptrend. Right, remember I told you at the starting that 70% of the time, right, the market will drop 5 to 19.99%. So 5 to below 20%. 70% of the time, in the past 94, 95 years of US stock history. Right, so pulling back, right, is a common thing. You have to accept volatility. If you cannot accept volatility, then stock market is not for you. Property investment is for you, because property investment don't have much. Yes, the price will drop, but it won't have drastic drop like the stock market. So that's why you have to understand your character again. So that's why the previous webinar that I did about understanding yourself, that is very important. Right? If you are someone who cannot take volatility, then I think property investment makes more sense. Right? But if you're someone who can take volatility and you don't care about it and just focus on long term, then stock market will be good for you. Okay. So someone asked, are dividend stocks and REITs still reliable for long-term income? I think it is, right? Dividend stocks, and you want income, you have to invest in dividend stocks and REITs, right? But just that you don't concentrate too much on the REITs, right? I think maximum allocation, right, for REITs should be at least 30%. Ideally, I prefer 20%, not 30%. Why I'm saying that is because REITs are very interest rate sensitive and they don't grow and they pay out everything. The only time they grow is through acquisition. And when they do acquisition, right, they will use their debt to buy. Right? But if they don't have, they've used it max already, right, then they will have to ask money from you again. Right. So in the end, it's also your own money to grow the thing. Right. So my take is, right, just keep the REITs portfolio between 20 to 30%. Okay. But majority still must be on the dividend stocks. Okay. Okay. Someone asked, will interest rate cut boost the market or cause a rotation away from the tech? I think interest rate cut will boost the market. I don't think it will rotate from the tech. It will boost all the stocks, man. Okay. When the interest rate is low, people can borrow. When they can borrow at cheap loan, they usually invest in the stock market or invest in property. You inflate the whole asset price. That's what happened to inflation. The inflation, of course, because we have been running on long-term low interest rate environment. That's why the inflation it comes so big and comes so crazy, right? So you have to understand, interest rate is like a lever, When you low interest rate, it brings up the assets price. When the interest rate is high, everything all drop. So you must always remember this. Okay. So someone asked, should I invest in US stocks that pays dividend given that the non-resident tax? Is there a cost to identify growth stocks? US stock, you got no capital gain, but you got dividend gain tax, that's 30%. So if you are buying for dividend, don't go to the US stock market. You should go to the Asian markets like Singapore and Hong Kong, where your tax there's no tax on dividend and capital gain. Okay. Is there a cost to identify growth stock, yes, we have this course called the Alpha Quadrant. That's more for growth. Dividend machine is more for the dividend side of thing. Okay. Okay, so someone asked, how do you avoid being over complacent in the analysis of a company that has already passed all your screening criteria and appears to be good on all fronts? Also, how do you remain objective when assessing the potential disruptions and threats that this seemingly good company face? Okay. So in order to not to be consistent, right, you need to look your investment in terms of probability. Okay. Every time when I look at my stocks that I buy or investment I buy, I look them in terms of probability. Right. That means you can be right and you can be wrong, but there's no 100%. Because when it comes to probability, there's no 100%. There's no 100% you will be right on. There's always high probability or low probability, but yet there's always a percentage that the low probability that you will go against you, that you miscalculate and misthink. Okay, so usually I'm very objective now. The early years, maybe I will be affected, but as you invest for long term, you make mistake. Okay, this one very hard to teach you on. This one you have to really go through the mistake on. Then you will start to strengthen your checklist, strengthen your investment, how you look at investment and everything. And that's how I did for the past few years. Okay, I strengthen. I mean, from now compared to like 15 years ago when I just started, I'm a very totally different type of investor, and I'm still improving on every day. You know, I'm still improving. All right. So there's so much to learn about investing. Okay. Okay. So just take note. Okay. How can we be more resilient? Someone say. Okay, so I mean more resilient as in investing in more resilient company, is it? If you're talking about this, right, then you go and look at the companies, you go analyze the company, then you look at the company past track record, how they have performed during crisis. Right. Example like Costco. You look at Costco, the past crisis, they all still making profits on there. Still growing their profits, growing their revenue. So you know that every time the crisis happens, this company is not affected on. So these are how you position yourself to be more resilient. I know a lot of people who do that. That means they focus on looking at companies that are very resilient during crisis, and they buy them, and they are not afraid of crisis because they know that every time when the company go into a crisis, they'll come back stronger, right? They won't drop a lot also. So there's this guy called Alan Mitchell. You can go and Google him, Alan Mitchell, but he closed his fund I think due to health issue. But previously, right, because he's very focused in looking at companies that are very resilient during crisis, he bought it, right? And when 0809 comes, right, everybody is down, right? He's up because he buys in companies that are very resilient during crisis, right? They are not affected during crisis, right? So that is another way that you can think about it. Okay. Someone asked, I'm a Dividend Machine Pro member. I would like to ask if there is any difference in the investing strategy you use for cash, SRS, and CPF. Okay. So I think when it comes to CPF money, right, it's a sort of like a forced saving by the government, right? I tend to be a bit more conservative when I invest, right? I don't like to buy into the S&P 500 index using that, right? I will buy into the Singapore dividend stock because I want to keep my exposure to Singapore stocks for my CPF or SRS. Okay, I don't want to expose to overseas. Why? Because I'm already using my cash to expose to international stocks already. I don't want my CPF to expose to international stocks. So I take it as a diversification. I just focus on my local market. Right. So in case the international stock fails me, I still got my CPF, everything down there to protect me. Right. So that's why I think you have to be more conservative when you investing with your CPF and SRS. Okay. But your cash you can actually use to expose to international market or the US market. That's what I'm doing right now. I never invest my CPF in any index, S&P 500 index, to increase my exposure and risk. Because I can sleep well because I know I still got a backup plan behind. Okay, so that's my take on my portfolio allocation. Okay, should we invest in our CPF money? I think you should if you know, right? If you know how to invest, I think you should consider investing your CPF money. If you don't know, then please do not. Right? Most people just transfer to your SA and max out your FRS. Okay. I did invest my CPF. I invest in my, I think a lot of you should know I invest in my OCBC. My cost price was about $9 and 9.036 cents, right? $9 and 0.036 cents, right? And now the yield I'm getting is like close to 10%. And now I think today my OCBC is about $18 plus. So I already doubled in terms of the cost. On top of that, I receive a lot of dividends also. Right. So, and the dividend yield on cost is higher than the 2.5% or the 4%. So I literally beat the CPF, right? So that's the only criteria that you can use to invest. Okay. If you want to learn more, I will be running a how to invest and optimize your CPF in this coming January. I think around mid-January after we come back from our company trip, right? I think it's around maybe 16 or 17. I can't remember what's the exact date, right? So if you want, you attend that webinar. Okay, that's for general public. Everyone can attend. Okay, and that I conduct once a year. Okay, so someone asked, is it better to invest in VWRA or VT, right? Because I think it's the Vanguard Total one, which is a US listed. VWRA is a London listed, which is the tax one. Okay, does the tax matters a lot? Yes, it matters a lot. Okay, in fact, you see, VWA seems to have higher maybe expense ratio, right? But you based on the dividend tax, right? You minus it off. Actually, you still generate better returns than you invest in VT. Right. On top of that, if you were to invest in VT, anything happened to you, then you got the estate tax. VWA got no estate tax because it's domiciled in Ireland. Okay, so take note about it. So estate tax is very, very crucial because if your money is a lot, your estate tax can go up to 40%. That means if you 1 million, 400,000 is give to the US government, Okay, so take note about it. YK say, where is 5th person going in December? Oh, no, we are going in January for R&R. We're going to Japan, actually, for company retreat. Okay, so let's move on. Some useful ChatGPT prompts to help evaluate a stock is worth entering into or do your stock research. I think in general, the ChatGPT in terms of like research, like, okay, what is the business model of this company? I think it's still okay. But you're asking me to do deep research, right? I still question mark on that, right? Asking you to read transcript, I tried already, not accurate, hallucinate. Okay, I think I find ChatGPT good is when I ask them, okay, what is the business model of this company? Then they tell me a summary. I roughly understand the business. On top of what I read, I want to double confirm whether I correct or not. All right, so that I think is still okay. Then another one is I think is good is like I will ask ChatGPT, why the share price have fallen this year, right? From fallen so much since maybe when? Then what is happening? Help me find out, right? Something I read something like that. Then they will tell me. So far, it's quite accurate on that. So I think all these are good prompts. The actual help to do research one, I think still not so good. Still some ways to go. Okay. Okay, someone said, I want to use Moomoo app to start buying ETF. I do not know how to diversify my money across the stocks and funds. That is what I want to learn. Also, I wonder if I can diversify all my money into various funds just through the Moomoo app. You can do that, okay? But sometimes I prefer to split between two brokers. I don't like to have Moomoo is considered overseas broker actually. Right? Because I think it's run by I can't remember is it listed or not, but it's owned by Tencent one. Right? But I still view them as a overseas broker. I do have IBKR and I also use FSM1. Why I'm doing that is because IBKR is an international broker. They give me access. Then FSM1 is also can invest in international stocks and all this, but at least it's a local broker and it's owned by iFast. And iFast is listed and I can look at the balance sheet and see whether they are strong and they won't go into financial issue. So I prefer that. So that's my safe buffer. Okay. Okay, so that's my take on having a broker. Okay, so yeah, so that is my all the pre-submitted questions already. Okay, so how many of you felt that you have learned something up to this point? If you have, do let me know that you have benefited from it. Just type yes in the chat and let me know. Okay, if not, I will just go for I will just do a live Q&A right now. Give me a minute. I'll stop the screen sharing. Show my face. Okay, yeah, I'm just going to do a live Q&A right now. Just now it's about 9:20, right? The webinar is supposed to start at 9:30. So I just maybe do a quick 10 minutes Q&A. Okay, yeah. So most of you say it's helpful. Thank you so much. I hope you guys enjoyed the last webinar of the year. Okay, so this is the last webinar of the year, and so happened the last webinar of the year, the webinar software screw up, right? And I have to use my own com, and the quality of the video is not very good. So I'm sorry about that. Okay, I cannot control this. It's somehow the tech fails me this year, and now I'm even in the storeroom of my company. So that's why I hide it, because I'm in the store. You can see all my settings here. You can see all the setting behind the storeroom actually. Yeah. So sorry about that. Okay. Hope you guys cut us some slack. Okay. So let me answer some live questions over here. Let me see what's the questions here. Okay. Okay. Jay says storeroom must be damn hot. Yes, it's very hot. I'm sweating right now actually. Okay, Arthur said, do you think BYD is still a good investment? They are known for long overdue payment. I think in general, right now everybody is chasing EV stocks lah, and it's very competitive. There's a lot of competition. So I generally don't like to go into industry where suddenly there's a lot of competition inside. Every funny people are doing car right now, even the Xiaomi also. So I think I don't really want to look at EV. So that's why you don't see us talking about EV industry, and we don't really invest in them. Okay. 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 Leonard said, do you think Japan carry trade issue will cause a market correction soon? I mean, if it really happens, I think definitely there's some margin calls and some trades have to sell and all this. Definitely there will be a shakeup in the markets. So just do take note about it. Okay. How the impact, I really don't know. Okay. But definitely, I think there will be a shakeup. Helen say, why do you say Suntec is a bad REIT? I think generally they are not managed properly. This is the first thing. I mean, they are not as good as a lot of the other REITs, I would say, in terms of the assets. Okay. Okay. Darren say, is KLCC REITs okay? I mean, we covered KLCC REITs to our internal members long time ago, and it was cheap. But now I think the Malaysia REITs they recover much faster than the Singapore REITs. They already surpassed in general, the whole market is like 1 SDA. So now I'm telling people to clear Malaysia REITs, in fact. Okay. Gabriel said, Wilmar share price have dropped tremendously due to legal issue. Is this a temporary issue? Seems like a temporary issue, but we have to wait and see approach. I think the in terms of risk reward is still not that attractive at this moment. We are also looking at Wilmar actually, but I'm looking at a better risk reward. Oh, okay. Okay. Okay, thoughts of Yangzijiang Financial and Yangzijiang Maritime. I have no thoughts about it. In fact, this company I never tracked them on. In fact, they have been listed in the Singapore Exchange for a long time. I never been to any of their analyst briefing, AGM or something. I just definitely have no interest in them. Rick say Parkway Life REIT. I think Parkway Life REIT is a very stable REIT. You just need to buy at the right yield only. Okay, it's a very strong REIT actually, in fact. Okay, let me see what other question. Someone asked, will a fifth person consider setting up a Discord channel for dividend and alpha members? Yeah, we can consider it. I'm not so sure how Discord works because I personally never use it also. Right. Someone's asked, is PoolCrop undervalued? I'm not so sure. I never tracked the company recently, so I'm not so sure what's the valuation right now. I can do a quick look right now. Let me see. PoolCrop. Let me do a quick look. Oops, I don't know why I cannot access my software. Just say 44 years old, semi-retired, and 19-year-old pre-NS intern. How will you invest? I think if you're 44 years old, you're preparing for retirement, you should build a dividend portfolio. Let me see. PoolCrop. Give me a minute. Yep, seems to be trading below their 10 years average. I think if I'm not wrong, Buffett actually bought into PoolCrop. So I think maybe the valuation is decent. Yeah, you can. I don't know. You have to look. It's traded at below its average right now. Not so sure is that 1SD. I cannot calculate right now. Yeah, but anyway, maybe the person who bought into PoolCrop may not be Buffett itself. It's the Ted Weschler or the another guy, Tokcom. Matthias say, very good session. Thanks, Victor. This session isn't recorded to watch replay, including the other 6 public webinar. We do have the replay sent to you, so you just wait for the replay. Right, the previous one you missed it. That means you missed it. Wait for next year. Right, it's very dynamic one. Okay, because the replay is sent by the system. So a certain period, then you will just gone. Phyllis say tracker fund grows slowly since Hong Kong is the preferred market. Good to pick up more right now. Like I told you, the Hong Kong market just now I show you, they are slightly traded at slightly above fair value. You're very interesting. You should have bought the Hong Kong market 1 to 2 years ago already. But right now, when the market is going up, everybody want to buy. Then after you become buy high, sell low already. You have to really look at valuation and look at things. The important thing. All right, Leonard says sets that position seems to be improving. Will 3% consider looking at it? I mean, we are tracking sets. We are going to our AGM every year, so we are just tracking them. Right, so if it really worth the look, we usually will inform the members and all this. Okay. What tech ETF for Hong Kong do you suggest looking? Hang Seng Tech ETF lah. HSI Hang Seng Tech ETF. Okay, so yep. So right now it's about 9:30. Okay, so I hope you guys like the webinar. I'm going to end the webinar right now because I don't want to drag because I'm inside the storeroom. It's very, very hot. And I hope you guys really learn a lot. I hope I answered a lot of the pre-submitted questions. Okay, so if you really want me to answer your questions, usually I will ask people you pre-submit your questions in front so I can prepare, right? Because sometimes when you ask me right here, right, I have to really go and check the company also. I need to go and look through and all this. Okay, so I hope you guys like the last session of the year and you guys enjoy and you learn something. If not, Merry Christmas and a Happy New Year, and I will see you next year. Okay, thank you so much, and I'm going to end the webinar right now. Thank you. Bye bye.